Hey everyone, Couch Investor back on our video for today. Let me present you 4 dividend kings, meaning 4 companies that have been increasing their dividend payouts for over 50 years. You heard that right? 50 years of consecutive dividend payouts increases. Now, of course, since it's over 50 years, most of you are very familiar with those companies. But even if you are familiar with those companies, even if it's a popular name, and even if this company, its stock has gone up throughout the years, if you have a dividend portfolio, these are core elements to a successful dividend portfolio. And so I'll start with the first one here, which again, you probably know that company because you buy its products. And that's PepsiCo. Now, PepsiCo currently trades at a cheaper valuation than its 5-year mean across all those metrics here. Forward PE, EV to EBITDA, price to sales, price to free cash flow, that's in the last 12 months, and that's the only one that's extremely close to its 5-year mean. All the rest here, PE, EV to EBITDA, price to sales, we are much lower. Now, currently, this company has a market cap of $232.7 billion, and on a year-over-year performance, the stock is down 2%. Holders of PepsiCo will get a 3.03% yield, which we're going to have a look in just a second. But what you're also getting are share buybacks. So in the last 10 years, you can clearly see that shares outstanding has been coming down. More recently, we had a little bump here, but you can see that this has happened already in the past. But after that, we keep on seeing a decrease in shares outstanding. Overall, free cash flow per share remains positive, remains increasing. This is for fiscal year 2023. We still need one extra report. And then for the future 5-year growth rates here with regards to EPS, the estimate sits at a growth of 8.42%. If we look at the dividend, the annualized growth in the last 10 years was 8.13%. If you look a bit closer to us, last 3 years, that's a 6.89%. So still quite good. So basically, if you bought 10 years ago a stock of PepsiCo, it would have been paying you 57 cents. Now that stock is paying you $1.26. Of course, since then, the stock itself has appreciated in price. Now, what are the expectations for the coming years for PepsiCo? Well, for fiscal year 2024, analysts are expecting year-over-year growth of 4.62% and EPS growth of 7.92%. For fiscal year 2025, we're getting a bit of the same. Year-over-year growth in sales of 4.89% with EPS growing also closer to 8%. Currently, if we look at the analyst price target, the average price target sits at $187.57, representing 12% upside. But of course, price targets will change over time. Now, before jumping into company number 2, which is also a very familiar stock, especially pretty familiar to PepsiCo, do me a favor by hitting that thumbs up button. If you enjoy these type of videos, maybe subscribe to the channel. It's free, so why not? And if you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, company number 2 is major competitor to PepsiCo, and that's the Coca-Cola company, the largest beverage company in the world. Now, the main difference, maybe not the main, but I think the big differentiator that we can make here, both of them make a lot of money through beverages. But with regards to Coca-Cola, you're really fixating on that Coca-Cola family of beverages, plus logistics network as well. But with PepsiCo, you also get an assortment of snacks. Very important to note, for those of you that don't want both companies in your portfolio, one has beverages and snacks, the other more focused on beverages. Now, the Coca-Cola company has a market cap of $261 billion, pays pretty similar dividend yield as PepsiCo, 3.05%. Performance in the last year, it's up 1.77%. Now here as well, if you look at these metrics, PE, EV to EBITDA, price to sales in the next 12 months, it is lower than its 5-year mean. Price to free cash flow in the last 12 months, a bit closer. Now, of course, with interest rates expected to go down, expect dividend-paying companies to be back in favor. Now, with regards to shares outstanding for Coca-Cola, unlike Pepsi, we actually have seen an increase in shares outstanding since 2018. But despite that, free cash flow per share has increased quite nicely throughout the year, and the EPS 5-year growth rate sits at just under 6%. And here, if we look at the dividend growth in the last 10 years, the annualized growth is 5.21%. In the last 3 years, 3.74%. Basically, if you bought 10 years ago, you got 30 cents. Right now, you're getting 46 cents. As for the analyst expectations in the next 2 fiscal years, sales growth will grow in fiscal year 2024 by about 3% year over year, with EPS growth of about 4.47%. Then in fiscal year 2025, we actually have reacceleration in growth. Sales is expected to increase around 5% year over year, with EPS expected to grow 6.83% year over year. As for the average analyst price target, that sits at $65.19, representing close to 8% upside from the price we're at today. Up next, company number 3, and that's maybe a company that you might not be familiar with, because it's not one of those popular names that we always hear or always get in a list when we talk about dividend kings or just dividend players. And that company is called Genuine Parts Company. This automotive and industrial parts distributor basically supplies parts to businesses in various sectors like auto repair, agriculture, and industrial manufacturing. Genuine Parts is a vital cog in the machinery of commerce. And this company has a market cap of just under $20 billion. The stock's performance since last year, it's down 15.73%. Now here, same thing, PE, EV to EBITDA, price to sales in the next 12 months is cheaper than its 5-year mean. Price to free cash flow is a bit more expensive. Now, of course, with supply chain issues, with interest rates being up, there's a lack of demand, of course, with regards to cars. So the automotive sector has been taking a hit, and so companies like that obviously take the hit as well. But looking at the big picture, in the last 10 years, shares outstanding have been coming down quite nicely. Free cash flow per share has been increasing as well. And here the EPS estimate with 5-year growth rate sits at 9.26%. If we look at the dividend growth, the annualized growth in the last 10 years, 5.92%. In the last 3 years, 6.13%. And here as well, if you bought 10 years ago, you would be getting 57 cents. Now you're getting 95 cents. Looking at what the analysts are expecting for the next 2 fiscal years, sales growth of 4% for fiscal year 2024 and EPS growth of 6.69%. Moving to fiscal year 2025, a small reacceleration, sales growth of 4.58% year over year, and EPS growing 9.89% year over year. If we go look at the average analyst price target, that sits at $155.72, representing 12.19% upside from the price we're at today. Up next, we move back to a more popular name, more common name, and that's the giant in the healthcare space, Johnson & Johnson. Now, Johnson & Johnson has a product portfolio that ranges from band-aids to baby powders to life-changing drugs, medical supplies, etc., etc. This company has a market cap of $390.92 billion, and its performance in the last year, the stock is down 3.84%. Here, we're getting in an area that is a bit more expensive than the previous 3, but still, forward PE, a bit lower than its 5-year mean. EV to EBITDA in the next 12 months, a bit lower as well. Price to sales is the same. Price to free cash flow is a bit more expensive. Now, the healthcare sector, pharma, has taken a hit in 2023 because of the huge boost it got in 2021 and especially 2022. But most analysts, most big investors are expecting 2024 to be quite a good year for pharma companies. If we go and look at shares outstanding, in the last 10 years, shares outstanding have been decreasing, and more recently it has decreased quite a lot. Free cash flow per share over the years have been increasing a lot as well. Again, this year we are still due for one earnings report. And then the growth here, EPS 5-year growth rate, 4.28%. If we look at the dividend growth in the last 10 years, annualized growth sits at 6.21%. In the last 3 years, 5.78%. So here, if you bought 10 years ago, got 66 cents. Right now, you're getting $1.19. And so, what are the analysts expecting for the next 2 fiscal years? Well, here you also can clearly see fiscal year 2023, a hit for sales and for EPS, and so a reacceleration in fiscal 2024. Sales growth 3.75% with EPS growing 8.13%. And then in fiscal year 2025, sales growth of just 2.78% and EPS growth of 4%. If we look at the average analyst price target, that sits at $174.68, representing 7.57% upside. So there you have it, 4 dividend kings for you in this video. Of course, there are plenty other dividend kings out there. You can name them in the comment section below if you own any other companies. And if you have hidden gems like Genuine Parts Company, do let me know as well in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I would really appreciate that. And I'll see you all in the next one. Bye-bye.